Hey everybody, welcome back to AWM Insights. This is Brandon and Justin, and as you know, we started this podcast for our clients so that way we could discuss the relevant topics in the public and private investment markets while also talking about a broader investment lesson. And today we're going to dig into one of our favorites, the gambler versus the scientist. Are we speculators or are we actually investors?
Everyone's
a
an
rousing
investor.
topic.
Come on.
Well, you
No.
you never see me walk through a casino. I'm a sucker for the roulette table. Don't hold that against me. But before we jump into that, Justin, why don't give us a little taste of what's going on in the markets?
Yeah, so a couple big items coming up as we're recording this today. U.S. inflation hitting the fastest annual pace since 1982. We've talked about the inflation topic quite a bit, so there's some podcasts on that. I definitely recommend going back to those if you're curious. And if you have additional questions, let us know. It's an interesting topic. It's obviously top of mind. We can certainly spend some more time in the future tackling that, but we don't want to beat a dead horse, so to speak. So your feedback's always welcome, though. U.S. on the flip side, though, so inflation incredibly high. On the flip side, real positive data point, U.S. unemployment claims, which come out weekly, are at their lowest level since 1969. There was a really low print of that statistic the week of Thanksgiving. Some people are saying, oh, that could be an anomaly because it's shortened week and not just how they collect those statistics. But it seems to be a true statistic. You're seeing it repeat, and these unemployment claims remain incredibly low. So good for employment. Starbucks employees vote to unionize at a single shop in Buffalo, New York, I believe. So that'll be an interesting potential trend to watch, see if that spreads throughout other Starbucks chains. And then, kind of something just teasing out this general topic. There's over the last couple weeks, as we've had the new Omicron variant make headlines, the Fed changing their stance largely due to the increase in inflation, there's been an adjustment within the market. So there's a great article in the Financial Times called titled Sell-Off in Market Silliness. And really, if you look at the broad averages, not too much off record highs. We're pretty close to where we were, 3-4 weeks ago, near highs for the years. But if you look under the hood a little bit, you're starting to see these more speculative, again, another teaser here, speculative assets and stocks really come off their highs. So anywhere from these meme stocks, AMC, GameStop, etc., or just the broader based unprofitable companies, SPACs, so on and so forth. Those more speculative type investments that did well earlier in the year have really, really come off. And we'll touch on risk and return are related, so that it's not all that unexpected. Then last item, the new SEC chair, Gary Gensler, really took aim at the blank check companies, or what are SPACs, special purpose acquisition vehicles, saying they provide ordinary investors with incomplete information and insufficient protection against conflicts of interest and fraud. It seems like the market kind of understood that as well, just given how these particular vehicles have performed as of late, understanding that usually a company is going public in that route because it's a quicker route, not necessarily because they want to obfuscate their financials, but it's just quicker. It's bang, okay, understand the data after the fact, almost more so than like really sinking your teeth into the disclosures and making sure your financial statements are sound. So again, all related to this topic, and we'll get into a little bit more of our take and how we think about it right now.
Yeah, no, I think that was a great lead in, Justin. I think, when I look at this and you look broad based, right? And you look at the indexes, that's kind of the deceiving piece, is the indexes actually seem to be holding up, as you mentioned. And we hear, inflation's going crazy and, but employment's good. So you start to look at these different things and try to make sense of what's actually going on. Sometimes you have to lift up the actual hood to see what's going on, and what it's revealing, like you said, is some big sell-off in some of this real speculative type stuff. And, it's intriguing when you see, everybody loves the reason the lottery exists, right? Is because all of us want to win it at some point. But what we all know intuitively is it's actually a tax on the poor, right? It's the people that need that extreme return or are attracted to that extreme return to take, risk that, like you said, risk and return are related. And so, if you're going to have this potential huge outcome, although it be very small, you're going to have to risk the proportionate amount to expose yourself to that. So, I just think it's really fascinating to start to think about, what are you trying to do here? Are you trying to be a long-term investor, or are you trying to kind of hit that home run and really just take advantage of some sort of market movement? We've seen not only the meme stocks and these kind of, no rhyme or reason stocks sell off. We've seen crypto. We've seen, these other markets, continue their volatility and sell off as well at times. And to be clear, we bang on crypto quite a bit on this podcast. And, I think one thing to set straight, because I've had this conversation quite a bit with clients lately, is what we're not saying is that you're not going to potentially get lucky and pick the right one. And I think even when we talk about, the crypto markets specifically, like, do we believe that one of these technologies is probably going to dominate the next, decade or our future? Absolutely. I think we can say that. But I'd heard there's over 6,000 cryptocurrencies out there right now. What we always talk about is the speculation of which one is actually what's going to get you into trouble. We are not saying that it's not going to work. We actually believe very much it's going to work. What we believe very much, like picking individual stocks, is that we have no way of knowing, and that's because we're evidence-based.
Yeah, and just taking that crypto topic broadly speaking, I think it's a great one, and probably one that has really been, at the top of this more interesting market environment throughout the year is take a step back and think about the fundamentals. It's really hard to, and we talk about fundamentals in our industry. It's a very common word, and essentially what that means is using how you set up or intro this podcast, the science behind it. Is there a fundamental model or a logical model that we can apply to an investment and extrapolate some future value down the road? That's where I would say investing kind of falls within. Speculation is when you're taking the same type of approach, but there's a whole heck of assumptions, a whole hell of a lot of assumptions in there. Like, oh, Bitcoin's going to be the new gold; it's a digital gold, or Bitcoin's going to be the currency of the future, right? Those are huge claims that aren't really backed in strong fundamentals. Doesn't mean they're wrong, but because there's not a real true fundamental logic backing it up, it falls more in that speculative bucket. And then taking a even further step back, I mean, again, we're sticking on crypto because I think it is a great just topic to discuss this whole broader speculation versus investing, gambling versus science type thing. Is crypto is incredibly interesting, but what's truly interesting within this broad crypto topic is blockchain. Blockchain itself, in many respects, doesn't require cryptocurrencies to have an appreciating value. Blockchain becomes an infrastructure in which all sorts of applications exist upon and benefit almost anyone, right? The whole concept is it's conceptually removing intermediaries from many, many different industries, which remove frictions, which remove costs, and which end up benefiting people. That is amazing. We're not there yet. And like Brandon, you said that there's a number of different blockchain quote unquote technologies or protocols and companies at the end of the day that are vying for this top spot. And it's the Wild West. There's 6,000 or some odd, what the statistic was you said, cryptocurrencies out there who you can't, I shouldn't say you can't possibly pick which one's actually going to come out on top. And I just read an article today that now stable coins are starting to really take the day, and that makes logical sense to me because it's a great on ramp to this whole blockchain technology, but it's not nearly as volatile as the other cryptocurrencies that are out there and more popular right now. So anyway, yeah, hopefully that gave a little bit of context around speculation versus evidence within crypto specifically, but you can apply the same logic to equities and many investments.
Yeah, certainly. And I think you brought up a great one, right? The relating is crypto the new gold? Well, the crypto investors, hopefully it's not the new gold, because the last 10 years, if you would have put $100 into gold 10 years ago, you've got 95 now. So yeah. that's probably not a very good run. I think that goes back obviously to individual investment risk. We're not, certainly, I think that's the other thing a lot of people are doing. They're speculating on a few of these stocks. And it's like, shoot, man, if you over allocate your wealth to just a few companies, I mean, the pain on the downside, if you get it wrong, is pretty dramatic. And it's not just, it does go back to the fundamentals. I had a great example of this the other day. I mean, I took my 14 tubs of baseball cards to the card shop to offload because, Anne finally wanted them out of the house. And even my beloved 1990 Frank Thomas Leaf that I thought for sure was worth $1,000 wasn't worth anything. But, I look around and the card shop's packed. I mean, people are buying these cards like crazy. At the end of the day, it's a piece of cardboard. And, it was the same exact environment I was in as a kid. Yet, people were pretending like the frenzy isn't going to, take over again. So I just think, there's lots of different places we speculate. We're not even saying don't speculate, right? What we've talked a lot about on this podcast is just do it wisely. Do it with a plan. Make sure you've got your protective reserve taken care of. Make sure that the rest of your priorities taken care of. And then if you have excess wealth, and, we would argue we'd still want to help you build a multi-generational family, but if you want to take a piece of it and go speculate, you're not going to get an argument from us. It's just really having a good understanding of what it is, and having the right expectations for it. And, our kind of bring it all back around is just, this is a really difficult thing to do, to speculate on which company is going to outperform, which company is going to be around for the long haul and what that return's going to be. It's tough to even pick what the entire market's going to do. We've seen that over the last decade. You've had year in and year out somebody say, oh, markets are overvalued, they have to decline. And if you traded on all this different advice, I mean, God knows what your return would be. But when we go back to the evidence, what we know is that if we stay disciplined about being diversified and then allocating to those areas that have been kind of shown up in the data to continually outperform, you're going to have 3 out of 4 years where markets are positive. One of those years is going to be negative. What's interesting is good luck trying to figure out which one, right? Like none of the valuation data actually correlates to a predictive model. If that happened, we would all be rich, which goes against all fundamentals or all logic, really.
Yeah, and a couple of things I want to hit on. So, first and foremost, given that it's the end of the year, turning the calendar to a new year, you're going to start seeing the Wall Street Journal with their, I think they have a roundtable, I believe, or Barron's has a roundtable each year about, market forecasts for the year ahead or economic forecasts for the year ahead. What unfortunately doesn't happen is very, very infrequently, or almost never at least, is at this time of year, do we go back to who said what January of 2021? And
come on, the smart guys at Goldman had to have gotten it right.
Well, no, actually, if you go back and look at that, they were way off. So,
but they're Goldman. They're Goldman.
Yeah, anything they touches turns to gold, right? No, in all jest, I guess, or jest aside, but it's true. I mean. And again, it goes back to understanding the media and understanding all of this that we're saying, it's not to say speculation is bad or you shouldn't do it. Actually, speculation is a good, healthy function of the market. It's just not worth participating in for the maintenance of or management of long-term multi-generational wealth. If so, then it maybe in very small proportions, right? And we've touched on that. But if you're going to do that, truly understand what you're doing and what you're potentially putting at risk, so on and so forth. And then on the valuation side, I want to just touch on that briefly as we wrap here, is there's also two components. We can sit here and say, hey, markets are higher valued or at a higher valuation than they were 10 years ago. No one would argue that. It's then taking that data point, if you will, and extrapolating what they're going to do going forward. And there's no solid way, there's no proven way of doing that. What we do know is that if you participate in the long term or in the markets long term, even from arguably what is a higher valuation starting point today, you still have an expected rate of return. It still makes sense to participate in markets over the long term from today. I mean, from 5 years ago, the same conversations were being had 5 years ago. We can't take what's going on today and extrapolate that forward. There's no proven data point, valuation, performance, or otherwise, that is a good indicator of future outcomes.
Yeah, I think it's kind of a great place to kind of wrap this up. And I think, at the end of the day, speculation's really fun. We all play fantasy football. We all hit the casino from time to time, but it's putting it in the appropriate box and really having a good understanding for when you are speculating and when you're gambling. And then when you want to actually take the money that your family relies upon to provide for your priorities, to accomplish your protective reserve, to help provide the lifestyle that you desire, the impact that you desire. That money shouldn't be anywhere near speculation. It should be, in a very evidence-based investment strategy that you're going to try to get sold. Like Justin mentioned, this is the time of year we're going to start seeing, all the talking heads on CNBC predicting stuff and talking about what's going to happen. And I think it's just a good time to step back and remind yourself that the reason that those people are on TV talking and, different things is to sell ads. That is their primary focus, is to stir up all this emotion and get you all rattled and have you go take action. But what you really need to do is, rely on your advisors. That's is a big reason why you hire advisors and pay them, is to help you get through, emotional periods like that. But go back to the fundamentals, go back to having an evidence-based portfolio, be diversified. All the logic, all the advice that everybody hears and we know works, and just make sure that you're in a really good spot. And then if you want to, take your weekend trip and go gamble on a meme stock after you've accomplished all that, then certainly that's something you can get your kicks off of. But again, appreciate you guys. We ask that come give us feedback. We're looking for topics for next year. We'd love to hit on, provide a lot of value, continue to provide a lot of value to everybody that's listening. So yeah, head over to awminsights.com. We got some resources there that you can download, and we look forward to talking with you next week. Until next time, own your wealth, make an impact, and always be a pro.
The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.